I believe that the Fed's independence is crucial. First, let's back out what the Fed is chartered to do. It's an independent central bank, basically separated from government interference. It does have to report its activities to Congress. It does have its members appointed by the president, but otherwise, it's more or less, in general, intended to be left alone to use its own devices to achieve what they call its dual mandate, which is maximum employment, low inflation, and stable long-term rates. It actually sounds like a triple mandate, but you can argue that low inflation and stable rates basically follow one from the same. I don't have time to break out the whole way the rate curve works, but remember that forward interest rates effectively reflect levels of future inflation expectations. So if you have low and stable inflation expectations, you tend to have low and stable longer-term interest rates. Have they achieved this mandate? I'd actually argue, yeah, they're doing a pretty good job. We have very low unemployment rates right now and very high levels of employment. Inflation is very tame. One can argue that we might be pricing in a little bit of deflation, but as of now, I would say that we're running at a very low, stable inflation rate. And you certainly can't argue that long-term rates are unfavorable when you see the 10-year bond flirting with the two handle. Those are very low rates. So you could really step back and say, well, the Fed's got its job to do, and they're doing it. But yet we still see continual jawboning from the president and other outside actors, let's say. And I'm not a fan of that. I guess I'm an institutionalist, and I believe that the Fed has, basically should be run as an independent institution with minimal intervention, and being left to its own devices, it's doing a pretty good thing. The Fed chairman do hit speed bumps in the road, and I always say that when we get a new Fed chairman, he or she is usually tested pretty quickly, and Chairman Powell was tested in the fourth quarter of last year, and quite frankly, he didn't pass that test because he sort of jawboned the economy, the interest rate market higher. Basically got people concerned that the Fed was being too tight. I think he saw the error of his ways, and the rally we've seen this year reflects that. And so I get a bit annoyed when I hear the president, basically using all sorts of verbiage that's atypical in terms of trying to intervene with what I think is the Fed's decision process. I actually think it adds several risks to the system. The shortest term risk is that the chairman may want to really flex his own muscles about independence, and that if he's getting all this jawboning about lowering rates, maybe he stands a little firmer than he otherwise might, just to prove the independence. It raises just a level of risk in the system. Once you change the way things work, that creates uncertainty. Another word for uncertainty is risk. And so that's the part I don't particularly think that's market friendly right now. And if you want an example of what happens when a leader interferes in a central bank, you can see what the events that happened in Turkey over the past few days when President Erdogan removed the head of the Turkish central bank and the Turkish lira plunged, and there was all sorts of uncertainty that reigned through the Turkish market, which had already experienced uncertainty because of the fear that he might do just that. I think that most institutions in America work well, and as a result, I get a bit nervous when something seems to be impinging upon the possibility that those generally well-functioning institutions do not get a chance to function well. So I see a lot of this jawboning as a risk to the market. I think maybe I'm a bit more sensitive to it than most. The market seems to somewhat take this in stride, as evidenced by the fact that we're near all-time highs in the stock market and the bond market rates are very low. But as I look at it, the Fed has been given this mandate. They're achieving it. I think they're doing pretty well when left to their own devices. I think it's better for the markets as a whole, in an abstract sense, if they can continue to execute the mandate that was given to them.